So, what do you want to talk about?
To the moon, baby. Let's go.
What moon?
The stock market moon.
The stock market moon. Who came up with that?
I have no idea. Wall Street bets, probably.
Okay, let's talk about it.
So what is the stock market?
Imaginary people that come together and sit there and decide the fate of the world.
So the stock market is an exchange where companies come together to raise capital so that they can fund their projects.
I was thinking of Wall Street.
And bring products to the market easier.
I think I was thinking of Wall Street.
Now, over time, the New York Stock Exchange, also known as Wall Street, has become the most popular one.
Okay.
Right?
Yeah.
Why? Why is it so popular?
Oh. I didn't catch the cue. Okay, why is it so popular?
Because it's in New York, baby.
Okay.
Biggest, best city in the world, right?
That's what they say, but...
Till they tax you
90%. Then y'all come and move down here to North Carolina and then raise our stuff up. But thanks. We appreciate you.
I appreciate the appreciation.
That was a good one. As long as my taxes don't go up, y'all can appreciate all y'all want.
You got it, yeah. We had to argue that. For sure.
Yep.
So why is the stock market so popular now?
They've made it very easy for the normal person to sit there and trade, I think.
So in 1971...
Oh, I was talking about recently.
They took the dollar off the gold standard, right?
They took the
United States dollar.
You mean they took the gold off of...
They took the dollar off the gold standard. It's not backed by gold.
Oh, okay, I got you. Okay.
So, no longer was it prudent to save money. Because the value of the dollar, as you print more of it, decreases.
Yeah. Okay.
Because it's not backed by gold.
Interesting.
So, when you look at the trend in the stock market, you'll see that in 1971 it drastically starts increasing. Right? So, if you're not making anything at the bank on your money by saving it, you're losing money in the bank by saving it. You have to find another way to allocate your capital so that you can earn residual income, earn money off of the money that you have. Basically, to even keep up with inflation, which is usually 2% a year. This year is probably going to be more, but so that's why the stock market gained popularity, right?
Because people weren't saving money anymore?
Because you weren't making any money by saving money.
Oh, okay. Okay. Well, I thought you meant like most recently.
So why recently is it so popular?
Because I made it more accessible to people. They've come up with different apps and stuff that you could do from your house. You don't have to have a professional anymore.
Is that a good thing or a bad thing?
I mean, I feel like it's a good thing, but at the same time, that whole incident with AMC and GameStop, like, to protect the person who could be less knowledgeable, meaning like the normal people like us, they literally shut down people from being able to trade.
You could sell the stock.
Because they thought that, yeah, but you couldn't buy it.
But you could not buy it.
But that's what I'm saying, because they were trying to protect the average person because they're not as knowledgeable. But I'm like, that's not your decision to make. I felt like it wasn't their decision to do that.
So there's a regulatory body of the stock market. It's called the SEC.
Mm-hmm.
And their job is to protect the consumer.
They weren't protecting us.
So they have laws in place that these exchanges have to abide by, such as Robinhood or Webull, TD Ameritrade, which is the one I personally use.
Mm-hmm. That helped, that stopped us from doing it.
Right. So those safeguards are put into place to protect consumers. But in this case, it actually ended up hurting consumers because no one was able to buy their shares.
Right.
When they wanted to sell. It was just sitting there. Right?
Mm-hmm.
So
in that situation, they didn't protect us. They protected the other people. The bigger people that had more at stake. I feel like, but... so yeah, it's a negative and a positive. I mean, the negative is going to be if the market does crash, you know, that's going to be a negative for all those people that aren't educated in stocks that, you know, since it's been booming the past couple years, they're going to be in trouble.
So if you follow the sense commandments of business, right, there's one called E, which stands for entry, right?
I was going to say effort. Just kidding.
Effort.
Their effort.
Right, effort.
Entry.
Effort, actually, yeah. So to be successful, you want to make it where there's a high barrier to entry for other people to come into the space that you're dominant in, right?
Mm-hmm.
So that's why Amazon wants there to be a higher minimum wage. Because everyone that's a competitor with them would not be able to compete.
That's true.
Right?
Mm-hmm.
For example.
Because they wouldn't be able to find the workers, basically.
They wouldn't be able to pay the workers the price that Amazon and Walmart can afford to pay.
Right.
Because they're in the hundreds of billions of dollars. Whereas mom and pop is barely in the thousands of dollars.
Right.
You know? But so that's a barrier to entry. So what they've done with the stock market through apps like Robinhood, Webull, TD Ameritrade, Fidelity, Charles Schwab, they have made it where the barrier to entry is lowered. I can literally buy a partial of a stock if I only have $1.
It's pretty cool.
Right? There's no minimum to where you can start.
Mm-hmm.
So that has created a rush into the stock market. And whereas in the past, you would have certain variables on certain stocks that would cause the stock to be a good stock or a bad stock, those variables don't matter anymore. Because the people with the lower barrier of entry, they're going to invest in things they believe in. Not necessarily things that have good fundamentals of the stock market investing.
For example, GameStop.
So when you look at GameStop is, you know, if you do the math, GameStop's worth about $2, right? So, but what's it trading at today? $180.
Crazy.
But that's because the retail investor believes in that company, cares about that company.
Or you're talking about like us, people like us.
People like us, the retail investor, yeah, that's what we are.
Yeah. Oh, okay.
You know, they went into those stores, you know, as children, and played the games, rented the games, and that's caused that stock price to be higher than it is actually worth. And